Happy New Year, of course, to everybody. This is our uh, third meeting this year. The previous two meetings had to do a lot with creative ways. Our first meeting was with creative ways of financing your real estate. So options, subject to mortgages, and wrap mortgages. And then last week we had Alex Brashears, who was the Bigger Pockets author of Lending to Live, and she told us all about private money clubs. An awesome idea, I think. If you've got a couple of people, three, four, five, six, a dozen, whatever you want to scale it up to, and you pool your money and you lend out based on that, and you get fixed, cash flows. No equity upside, but you get solid cash flows. That's what the debt game is. So today we're going to introduce, and you know what? Why don't you say your name for me? I have a funny feeling I've been saying it wrong. Is it Donato?
Correct. Yes, Donato.
Okay. Donato Callahan. Thank you for coming in and talking to us today. I think this topic is going to be right up the alley of a lot of people that are here, that are engineers that are here, because we're going to be talking about data and how to use data in order to qualify the area that you want to invest in. So, Donato, why don't you give yourself an introduction and we'll switch over to you.
Absolutely. Well, first off, thank you all so much for having me here. Exceptionally excited to be able to talk through a very passionate topic that I love being able to discuss, which is real estate market research. And after getting to talk with Daniel earlier this week and learn a little bit more about the largely Intel community we have here, today I'm going to be doing a deep dive on, and I'll go ahead and share my screen here right now.
And Donato, I know
Yeah.
we talked about doing Chandler, Arizona. How flexible are you if we were just to take a poll right now and change locations? Would it make a big difference to the presentation, or should we
I
keep
can do. I'm flexible, so I'm gonna dive a little bit into Chandler, talk about
okay.
how really the tactics behind it, but then I can do any market that people here are interested in taking a look at. So there's been ones in your mind like Columbus or Memphis or Nashville or Kansas City or a variety of different places I can talk.
Sounds good.
All right. So again, my name is Donato Callahan, and I am a real estate investor and also the co-founder and CEO of real estate market research platform Bright Investor. And today I'm going to go through the power of market research, why it's so important, and how we can do it to make informed decisions and get really good results out of investing in properties nationwide, even if you've never been to that market or if you've lived in that market your entire life. Now, a little bit about me is I'm currently based in St. Louis, Missouri, and I own about 176 units in two markets. And as of this coming March, I'll be at about 400 units in three different markets, including Texas and Missouri. I've been able to do a lot of different types of real estate strategies, including long-term rentals, mid-term rentals, Airbnb arbitrage, and commercial multifamily syndications as a general partner, which have allowed me to actually quit my job at 24. Before this, I was working as a geospatial analyst for the Department of Defense and the intelligence community. And so I've been able to take my love of data and analysis and a lot of map-based information and take it to becoming the CEO and co-founder of Bright Investor, number one tool for market analysis and deal finding. This is what I like to nerd out on. I love looking at the data and I love looking at areas that people maybe overlook and finding which areas are the best to invest in that other people may just not know about. And so for today's goals, we're going to this welcome. We're going to dive into the deep topic of Chandler, Arizona. Should you or shouldn't you? And we'll also go into a networking and maybe a giveaway in the back end for a few minutes. And of course, lots of Q&A. So if you have questions about market research or have a market you specifically want to hear about, put it in the chat and happy to work with Daniel and seeing if there's somewhere we can go and take a turn and see if which markets you guys really want to have questions about. So right off the bat, the challenge with finding good markets is a huge one that a lot of investors get hung up on. And that's whether you're actively investing in your own portfolio and you're doing the work, or if you're passively investing into another person's real estate deal. Because the market largely determines your success outside of things you can control, which is why I strongly recommend, if you're taking notes at this point, write this one thing down. which is when you're buying a property, you're not just buying the brick and mortar. You are buying a piece of a community. And whether the community is doing well and being developed in and enriching itself will affect your success outside of your ability to swing a hammer and make physical improvements on the property. The hard part comes in with finding those good markets and making sure the opportunity that's in front of you is in an area that's going to continue to succeed and serve you for years and years to come, which is why it's so difficult because there are so many options. It seems like every single week or every month, there's a new hotspot to go on. Last year, a lot of that was Columbus, Boise, Idaho, Dallas, Miami, Tallahassee. There are some large markets that got a lot of attention and very rapidly increased in price. And so choosing one or being able to differentiate between a good market and a not so good market can be exceptionally difficult. On top of that, there's the things like what to consider when you're trying to select a good market. This is what I do every single day. I look at thousands of units worth of real estate deals across the country in multiple states to find my next deal. And so it's imperative in order to make that process as streamlined as possible that we know what to consider when looking into a market, and even more specifically, when we're looking inside of a market, like specific zip codes and neighborhoods, even streets. Because as we all know, if I were to say I invest or I live in Chicago, you might ask me, oh, is that on the north side of Chicago or south side or west side? Or is that zip code, a better one or maybe a worse one? There's so much going on inside of a city that knowing what to consider can really mean the difference between succeeding and failing at a specific real estate investment. And then there's the big question of how do you even decide? How do you take that action? How do you move forward? Which typically leads to a lot of people encountering analysis paralysis, leading them to do a lot of analysis, a lot of questions, a lot of research without ever actually pulling the trigger to get into a market. The solution to this type of problem is real estate market research. This is why there are many companies from the very high commercial level all the way to us here to Bright Investor that focus on making this information exceptionally easy to understand and feeding all the different billions of dollars of the transactions that happen every single year. Because this data flow is what people are looking at to understand where can I buy now that will continue to profit for me over 3, 5, and 10, even 15 years from now. Because that is where the real money is and successfully real estate investing. So the question is, what do you look for? Let's start getting into the meat and potatoes here. My goal is that at the end of this presentation, everyone has an extremely strong idea of what to be looking for so that the result is that you can go out there, look at markets and analyze deals with a more critical eye and have a lot more confidence what you're actually doing. Now, things to look for can include things like population growth, job growth by industry, vacancy rates, local school rankings, even things like build permit tracking to see which parts of a market are seeing the most construction. So there's a lot going on here. And any one of these things, if overlooked, could cause you to get into a deal that you maybe shouldn't have. So it's exceptionally important that we're looking at deals. We're not just gliding through and overlooking that market research and due diligence process, but everything we're seeing here is really just a cheat code for should I keep looking at this deal or should I not? Things like days on market tell you if a market's heating up or cooling down. Things like school ratings, when we see higher ranked schools, those are generally correlated with higher income areas, lower crime areas, and areas that we see continued property appreciation over the coming 5 years. So every word you see in the slide is really just a cheat code and a symbol for do you want to move forward and is this property going to make money? So let's apply all of those things on what to look for and let's dive into is Chandler a good market? Because we can answer that question unequivocally for right now, for where this Chandler is, we can answer this question. As we go into this, I also have to really communicate that when you're buying, do not buy blind. Please keep your eyes up. Any real estate investment you're going to go into, whether it's a large multifamily building like I acquire typically, or a long-term rental in your backyard, the stories you hear about real estate investors who come in and they acquire property and within 2 years they've decided to completely swear off real estate is largely because this process is ignored. So wherever you are choosing to buy moving forward, whether that's in Chandler or somewhere completely different, please do not buy blind. Keep your eyes up. and make your real estate investment decisions with a little bit of that data analytics that I know everyone here in this group coming from these amazing companies has the capacity to go knock out. Okay, so without further ado, let's hop into it. Whenever I start looking at a market, I always start with population growth. Bar none, that's always where I go. And to go through this presentation, I'm going to show you how Bright Investor helps you do this. So this is the mechanism that I do it. Of course, population growth, you can get a bunch of different areas. This is how I do it. This is why I built this platform over time. The rule of thumb for population growth in a market is 10% growth over a 10-year period. Now, that number that you want to look at, 10%, the larger a market is, so as we approach larger metropolitan areas, that percentage number can be lower because the market is more stable. As we approach smaller markets, say under 100,000 people, I expect that percentage growth to be a lot higher than 10% because I am much more at risk of having an issue with my tenant base or the amount of renters I can pull from when the population is that much smaller. So when I'm looking at Chandler, Arizona, and not just Chandler, but also the zip codes within it, this is what I get. On the right-hand side, I can see that over the 10-year period from the last census information, Chandler grew 13%, and its population is approaching 300,000 people. That's already a plus, and it's showing me that obviously Chandler is going in the right direction, up and to the right. Now, population growth, we love to see that because that gives us a lot more opportunity to serve people with our product, which is real estate. And I think a lot of investors kind of skip over this part sometimes. Real estate is a service business, and your product is your house or the apartment. The more people who are moving into your area, the more demand for your product and for your service, higher likelihood you're going to be able to charge more competitive rents over time and increase your profitability. So when I see higher population growth, I see higher demand and I see an increase over the next 10 years to continue to increase rents. But not all is equal. In the zip code 85225, I've never been to Chandler. I looked this up literally 30 minutes before we had this presentation today. I wanted to get the most recent information. Population growth was 6%, from about 69,000 to 73. Whereas just a little bit to the south in 85248, population growth was 25%. Now only at 29,000 to 36,000. But we can see that overall, the population growth is not evenly distributed throughout the entire Chandler market. Some areas are seeing faster and larger periods of growth than other areas. Now, when we see areas with higher population and smaller percentage growth, that is a more stable area that we're generally going to see higher prices and fewer deals. When we look at areas like 85248, the population growth is getting higher with a lower overall population. That is likely an area that is seeing more development, likely going to be a spot where we're starting to see more construction, more renovation, people moving into that area, and good deals could be more likely there because that area has not stabilized yet. Let's go on to the next component, which is after population growth, job growth. So for me, right now, population in Chandler gets a pass. And if I was looking at a deal here, it's a thumbs up from me. I'm going to keep moving forward and doing my analysis, and I'm popping the jobs. So this is straight from Bright Investor. We work with the U.S. Bureau of Labor Statistics to provide this information. And my rule of thumb here is 10% over 10 years as well. But I have to point out, this metropolitan area, the Phoenix, Mesa, Scottsdale, Chandler metropolitan area, experienced a 35% increase in the job market over the past 10 years. Almost 3.5 times my rule of thumb for looking in this market. And when we look at what specific industries are doing fantastic in this area, as shown by this colored graph down by the bottom, the top industries are the trade, transportation, and utility sector, professional business services, and education and health services, with the education and health industry growing by over 50% in 10 years. That is phenomenal job growth. And when we track demographics and changes in humans' location over time, we know that people follow jobs. And so we already know population is increasing, but the job market is increasing by an order of magnitude of 3x what the population has been over the same period of time. So when we see job growth like this, we know that attracts more people who are looking to seek more employment opportunities. And when I see job growth in these specific industries, like trade and professional business services and education, that tells me low risk because educational institutions like colleges don't normally go out of business. Hospitals don't normally go out of business. Trade and transportation and utilities for cities don't normally go out of business. And then traditional professional and business services like enterprises and businesses and white collar jobs, that can fluctuate a little bit, but it's also not the overwhelmingly dominant employment sector in this market. So it makes me feel better that there are other markets in here, other sectors that are supporting the overall growth in the job market. And lastly, I got to point out the construction industry has grown by 89% in the last 10 years. An 89% increase in construction industry makes me think this is clearly an area where people are pouring capital into development, into new construction, and this is an area that's going to see some massive increases in appreciation. But let's go ahead and let's check the numbers. Based on what I'm seeing here of an increasing population, which is a positive, an increasing job market, which is a positive, my next thought goes to where is the development happening? Are people swinging hammers? Are investors deploying capital? And is this a market where people are continuing to do renovation projects and putting on new units? Well, with Bright Investor, we can answer that question by checking the path of progress. So what this is a heat map of development activity. And everywhere you're seeing those hot pink areas, we're actually tracking millions of build permits to show you where are people doing projects? Where is the money? And very clearly, this area right to the east of Chandler and Gilbert is seeing some massive expansion. The build permits aren't necessarily happening in downtown Phoenix, right? They're going away from the city towards more of these suburbs, and this area is definitely seeing a lot of construction. When we look at the path of progress, this is basically a cheat code. Every real estate investor wishes that they could predict the future. And when we're looking at a market like this, if I know where the city is growing and I can buy a property just beyond that wave, when all the construction comes my way, I get the benefit of riding all that increase in property value as now all of a sudden I'm directly in the center where everybody wants to build. Knowing the path of progress in a market is the cheat code to predicting which areas are going to have the biggest increase in value. And we already saw the population's going great. We already saw the job market's going great. That is the area in hot pink where the most construction's happening, which tells me that I really like what's happening. I see the construction going on and makes me excited. I'm going to pause for a second. Oh, let's see some questions
Yeah,
here.
there's quite a few in the chat. I think I'm just going to call out a name, and if you want to take yourself off mute, you can ask the question. So first up, we've got Glenn.
Hey, thanks. We'll do our best to cover for you, Daniel, and your voice. Let's see. So I guess my first question was like, as you think about these variables that you listed out in your first couple of slides, right, that had all the various types of public data you could do. Is that something that your system is effectively trying to build some sort of weighted formula for that says, Eureka, east of Gilbert is the best place in the country to do based on that, or what are you using with all of that data other than to render?
So when we take this data, we aggregate from a variety of different sources, including both public and private. And what we do is we're taking all that data, crunching it in our back end, and then visualizing it and allowing you to layer it. So instead of putting all this data together and saying, yes, this is good, or yes, this is not good, what we do is with every type of data that we have, whether it's population growth, job growth, we'll get into it in a second, but rent growth and crime as well, we take all that information and we, just like you're using ArcGIS, we take it and we can save that as layers. So by toggling on all 5 layers, I can see where the most population growth overlaps with the lowest crime, overlaps with the most development, overlaps with the highest rent growth, to be able to target in specifically on which areas I'm most interested in, to be able to create a decision process on which market, which street, which neighborhood I want to deploy capital into for my next investment.
Thanks.
Yeah, absolutely.
All right, next up we have Manjunanatha.
Thanks, Dan. Yeah, I was wondering if the software can support like different real estate segments like STR, apartments, or single family homes
Oh yeah,
to do the
absolutely.
analysis.
Absolutely, it can. So when I got started, I was using this for long-term rentals in St. Louis. I was using this for apartment complexes in Waco and San Antonio, Texas. I have people who use this for short-term rentals in spots like Columbus and Indianapolis. I have folks who are using this for house flipping. I have a lot of flippers and wholesalers who will use this to track which areas are going to see the highest demand for their product once they finish their renovation and they want to go and buy in the most in-demand areas. I have investors from all different walks of life coming in here to be able to track market information and see which areas they want to go into. Absolutely. And in fact, put my money where my mouth is. I'm gonna do something that software people don't always do. I'm gonna do live version. This is the actual platform itself. See what's going on. So let's say I tried Chandler, Arizona right now. Let's see what's going on. One of my big questions now that I've looked at the path of progress, and you know what? This to prove the proof in the pudding. I'm going to say, show me all build permits. Let's say you just want to do active, completed, and requested build permits. And we'll do residential and commercial projects. We'll go ahead and generate that map. Go check this out as well. When we zoom in here, like again, right, Chandler's still going really hot in this area right towards near the airport. When we zoom in, we get all these different pins that are showing us what type of project is happening there. So when I see all these green new construction pins, I click on them and I can see this is a brand new construction going on in the end of 2022. This is clearly a brand new subdivision going in. And if I want to buy a property, it's going to increase in value. I'm looking to, and I can see that developers are going to pour a couple million into developing a brand new neighborhood. And this is an area that I might want to pick up a long-term rental or pick up some land because I know developers are going to be wanting to take that land and flip it into new properties very quickly. Now, if you're someone who's a bit more visual and you want to do something a little more easy, you come up here and we do change over time, generate our map. And just like you're watching a hurricane, we'll show you how the path of progress is shifting every single month. So if you actually want someone to tell you where is it moving, we'll use that heat map to show this is where things are moving. And clearly, things have been slowing down over time, which we all know in 2023 with interest rates that changed a lot. But this is how I can take a look at how interest rates at the federal level are impacting dollars spent in Chandler, Arizona over the course of several months when it comes to building. This is where the activities happen. Now, one of the next things I'll look at in a marketplace is rents. It's exceptionally important that if I'm buying a property somewhere, it has to have the rents that I need to cash flow. So what I'll typically do is I'll come in and I'll say, well, in Chandler, let's go ahead and see how are rents been performing over the last few months. So for an average two-bedroom in Chandler, current average rent about $2,100, $2,200 a month in Chandler for a two-bedroom. And we can track how that's going up over time. So if you have someone that comes to you and says, go ahead and lend on this property for me, I'm going to charge rents at $2,400 a month for this long-term rental. I'm going to refinance it and pay you back. I can come in here and say, well, based off the rent growth from our friends at Rentcast, current rents are only about $2,200 a month. It's oscillating quite variably while still going up, but I don't believe that the pro forma rents of $2,400, $2,500 a month can be supported by the current market. And then we can dive into zip code specifics. Which areas are seeing the higher rents and the lower rents? Try this out real quick. So are there any other questions while I'm doing this, Joe? I know I'm going really quickly here.
Yeah, Jesus, you had a question.
Yes, can you hear me?
Yes, go ahead.
Yeah, okay. Yeah, it's a very, very cool tool. Don, I think, something like this is extremely useful. the question that I brought up was right. If you follow the population growth and kind of the construction, right?
Mhm.
Wouldn't you also risk the if builders get say greedy and kind of overbuild in that area and just kind of create a supply surplus, and that'd be
Ooh,
kind of like the downside risk. And also like if you're trying to sell the 20-year-old home and those guys across the block have like a brand new home,
absolutely.
that can also hurt you on the other side. But I'm not like trying to pick holes or anything. I'm just like trying to follow that how you can play that strategy. And I
No,
actually live in
absolutely.
Chandler, so it's super cool to see this because I actually know the zip codes and things like that that you're sharing. It's very cool to
Oh,
see the
perfect.
data. Yeah, I've walked through some of these new build sites as well. So it's very, very, very interesting to see it.
Absolutely. And let me dive into that too, because there is an answer for that. And that's what I really want to
Okay.
communicate with market research. And that's why we don't say this is a good area or not. Because there's so many data points that we want to consider here that when we see all the different data that we can look at for determining if an area is good or not, we have it in Bright Investor, and there are other places you can get some of this, other places you can't. But when you look at this, we can stack all these things together like what's going on. So what I'll show next is how we can count for that exact component, which is, are people overbuilding and is this market getting seeing too much supply? We can't answer that question. One thing I'm answering right now is crime. If any of you are going to buy a property, whether it's your long-term rental, especially if it's a short-term rental or a mid-term rental, which a lot of people are going into right now, people don't want crime. If I'm going to check into a hotel, if I'm going to check into a nice luxury experience, or I'm going to spend a premium on a per night basis to go into a property that's well furnished for me, the sensitivity to people for crime goes down the shorter their lease is. If someone lives there for 2 years, they know the area, they're comfortable. Like I'm in St. Louis, right? I hear gunshots occasionally. I've been here for a couple of years, it doesn't worry me too much because I've been here. I know what that's like. But if someone who's never been to this area comes in and they're staying for 3 nights and they feel unsafe, that is how you get a poor review on your property. That is how you have overall a lower guest experience, in which makes you decrease the amount of money you can ask for. The result of all these things becomes down to how profitable and successful is your investment. So we work with the FBI, we work with Crimeometer, and we track national data to say, where is the crime? And so when I zoom in here, and I saw someone ask where we get our data from, if you go to brightinvestor.com, we have every data source listed right there. And in app, we have it all hyperlinked in here. So it tells you exactly where it comes from. You can check out every single thing, 100% data transparency. But when we look at Chandler, Arizona, there is my heat map for crime. And when I zoom in, individual crimes show up. So if I'm asking the question, if I'm buying a property and it's along West Fry Road, I can tell you, well, in December, there was a larceny attempt here, disorderly conduct here, a lot of disorderly conduct. I know I've never been to Chandler, but I'm gonna get this. I'm gonna bet there's a lot of bars up the street, a lot of disorderly conduct. I can see over here there's a weapon law violation last month. Someone fired a firearm. If I'm looking to see which areas I want to purchase in, we can visually see where is the crime centralized and what type of crime is it. As a note, the type of crime that will most negatively impact your investing is violent crime, simple and aggravated assaults, firearms, sexual assaults, and an overabundance of motor vehicle break-ins. Those are the types of crimes that cause people to break leases, lower rents, and move away. And very quickly, you can see Galveston neighborhood around the street, higher crime area, whereas maybe a bit more toward the north, right to the south of East Ray, north of Galveston. It's a nice little subdivision here, very low crime. And so you can see how we stack all these things together to say, here's where the population is, here's where the rent's going up, here's where the crime is low. And that's how we can start analyzing these markets specifically to get pinpoint accuracy of which area and which deal makes the most sense for you.
Okay, HP, do you have a question?
Hey there. Sorry, trying to find my unmute button. Yeah, I was just wondering, do you guys validate the accuracy of the data sets? Because my experience with private data set sometimes it's not super accurate. It has errors.
Absolutely. One of the biggest things we do is data validation through the vendors that we work with. And so you'll find that a vast majority of the data that's available on Right Investor is not publicly available. We actually work with a variety of different companies, including Redfin, including BuildZoom, including a variety of aggregators and companies that track this information through their work with real life contractors, local police precincts, and we pay a large premium to access their data sets, comb it, and cross-reference it with what's happening in the real world. For example, there was a crime that was reported in Columbus not too long ago, and a woman was literally, this happened 3 weeks ago, literally 1 hour away from making an offer on a 3 bedroom, 1 bath, single family rental. She went into Bright Investor, pulled up a crime report, and saw that just 2 blocks down the street, a breaking and entering and firearm charge was issued and laid in Bright Investor. So she took the address and she looked that up in Columbus. And first thing that came up was the article confirming what crime had happened at that local, that 2 blocks away, showcasing there was a breaking and entering where the firearm was discharged, and unfortunately, a young man lost his life. So we take situations like that to be able to data validate back test against what we're seeing in real life, what we're seeing here, and then consistently vetting and working with more new vendors to bring all that data into one place. So we do not just rely, we don't scrape data. A lot of companies like to just say we scrape information. That's not what we do. We have officially licensed agreements and contracts with all the different major providers so that we go out and we source because they're already serving thousands of real estate investors to provide this type of information.
That's great.
Now,
Do you guys have a plan to like open this data up for other user to take advantage of? Either in
yeah,
the
so
paid version.
yeah, so we have we do have a version. This is publicly accessible. This is every single person in here could go in to Brian Messer today and see this information. And I'll have some more information on that a little bit later. But yes, this is available. This can be used today. I do
I
want
guess
to
my
answer the
question is more about like through an API format. Do you
oh,
guys
gotcha.
to
So
do that?
through the nature of the fact that we license and we vend data through all different contractors, we don't then API the data back out to people because we're vending it themselves. We don't have the ability to resell or rebulk API out the data that we're then APIing out. So we are the consumer facing portal to be able to access all this information in one place.
Gotcha. Thanks.
Yeah. Now we did have someone asking a question like, well, what if population growth is high and build permits are high, but what if there's oversupply? We can answer that by coming right here to listing trends and saying, what is, let's see here if I can do this. How are the median days on market performing in Chandler, Arizona? We can get an idea of exactly which areas are seeing an increase in how many days properties are staying on market, which areas are seeing a decrease in areas staying on market. And I'll do that same thing with things like price per square foot and number of new listings. So that when I see properties that are in it, or I see areas that have an increase in the number of days on market and a decrease in the number of new listings, that helps key me into the fact that this market may be experiencing a downturn, may be experiencing colder areas, and I might be seeing a decrease in appreciation, which I don't think I've even looked at that yet. We can also just track appreciation. This is another huge one. Do you guys want the biggest guarantee of where you're going to make money over time? Just look at the appreciation. In Chandler, since January 2016, where prices were about $330,000, they've now increased to $571,000 as of last month. It's a 73% increase in median home price, or a growth rate of 0.6% per month. So if you bought back here, congratulations, you did fantastic. You did great on your property investment in Chandler. But we can also see the effects of larger macroeconomic conditions. Middle of June 2022, properties started taking a big dive for almost a year straight, from their peak of 620,000 down to about 531,000. So Chandler was not 100% resistant to the inflationary pressures and the interest rate pressures we saw. Now, on the other side of that, it has started to come back up. It very quickly rebounded back up to another ceiling level, about $600,000. And so when I'm looking at Chandler and I'm trying to get an idea of, is this a market I want to buy in? I can see the prices have very strongly increased. And moving forward, properties are likely continue to increase in this capacity. And this is buoyed with the major job growth, buoyed with the major population growth. All this comes together to say that this is a market that's likely going in the right direction.
Henry,
So then
I think your question may have been answered, but if you want to ask it, feel free. And the question that Henry had was about where do you get your data sources from?
No, yeah,
yep.
he answered it. So thank you so much and for the explanation.
Yeah.
Okay. We'll jump on to Eugenio then.
Does the system give a, oh, I see. Does the system give a recommendation, wondering about a summarized perspective relative to my investment philosophy or hypothesis? So currently we don't give an immediate, you should flip here or rent here. Now on Tuesdays, I do host a weekly webinar that's just education about how do you like what kind of strategies you should use based off what type of content and what you're looking at here. So we do talk a lot about that. It's in our emails, it's in the free education that we do. But I don't go and say you should do this in this way. Partly for liability, one, and two, because a lot of people have different risk tolerances. And where I don't like flipping, it's just I'm not a fan of it. I don't like flipping, I don't like wholesaling. Someone else might look at the same data and say, I'm willing to go in there and try a flip and try a wholesale. And so that's where Bright Investor really excels, is to come in and to provide clean, high integrity data to be able to inform the choice. And through the conversations and community that we foster, we help people choose which strategy is going to work for them in that specific position. But I don't tell you what to do in exactly which situation. Also, partly because if I tell everybody in this room, go buy a short-term rental in the East Chandler to E Pecos route of Chandler, Arizona, then I just sent 70 people all trying to do the exact same thing in the exact same area. So I want the people who are going to come in and look at properties and make those choices, I want to reward them by being able to say, this is what works for me, which is why we also have MLS access inside the, in the app. So summarizing everything we just talked about, right? Population growth, job growth, rent growth, crime, path of progress, appreciation. I'm liking what's going on in Chandler. And I'm saying, you know what? I really like this particular area. This is where I want to go. This is that next step. This is where we start saying, how do I find a motivated seller for for a property in this particular area that I like? So let's say I want to look at, I know the properties here are around $550,000. So show me properties that are between 400 and 700 grand in a 2 mile radius of the area that I really, really like, that has someone that is an absentee owner with high equity. And we'll just see. Because every single person that's going to sell this property, the more motivated they are, the better deal that you're going to get. So when I say absentee owner, that's someone who doesn't live at the property. Maybe it's a landlord. Maybe they want to sell. Maybe I can get a good deal here. They have high equity. This might be someone who's open to more creative financing and has the wiggle room to sell to someone like me who needs a good deal. Click search properties, and instantly I got 2 hits. This is an area that I like. I did all the research. I got a $540,000 4-bed, 2-bath property built in '98. Absentee owner, corporate owned with high equity, which means that this is owned by an LLC. I can see it last sold, just a few months ago for $476,000, and they're already reselling it. So what does this mean? Deduction. This is a flip. This is a flip. Somebody bought this 3 months ago for $476, and now they're selling it for what, $60,000 more in 3 months. So if you're looking for a long-term rental that's already done the work for you, I can click view photos. I'm almost going to guarantee this is a flip.
Yeah, it looks like
like
Open Door bought it done.
Yep, there it is.
Yeah.
So we can find that information, see exactly what's going on here, and start looking for deals that make the most sense for you in which area. So if you're going to do a long-term rental, mid-term rental, we know what rents are, we know what appreciation is, we know whether it's in a good or bad area for what we're trying to do.
William's got a good question. He's asking, how could we use this data to sell our property? What would we look for in that case?
Absolutely. If I was to sell a property, one of the things I'm going to do is say, look, I don't know, let's say I'm selling this property, 2947 South Birch Street. One of the first things I'm going to do is I am going to look at age, because depending on who's living in the area is going to tell me a lot about who wants to move in. Okay, so what am I seeing here? A peak in the number of people who are in their mid 40s and a peak in the number of people who are between 5 and 19 years old. This is
Hey,
suburbia.
hey Donato, just to jump in here, Glenn has actually got a potential zip code to try out if you want to jump to a different zip code.
Yeah, sure. Selling my 85248 property. Okay, so this is, let me go ahead and check out 85248. Let's go ahead and check it out. Okay. So if I'm looking in here, one of the things I'm going to do is, like I said, come over here to age, and I'm going to check out age demographics. Looks like an older area. Okay, so where the one I was just in, right, the median age was in the early to mid 30s. Median age is a lot older over here. So what this tells me is a couple different things. When I see an older median age for a zip code, what is less important? One is school rankings. When you have an area that has a high amount of people who have mid 40s with a lot of kids, the quality of schools becomes exceptionally important for, say, on selling that property. So for everyone in here that has kids, if when you buy or move somewhere, one of the first questions you ask is, are there good schools nearby? One of the first things you're going to do. So when I see an area that's a little bit older, that's not as much of a high priority to be able to sell something over here. But grandma, grandpa, you're going to have kids coming over here. That's clearly the more dominant demographic. I'm looking at things of, what is someone with a median age of about 58, a lot of neighbors who are going to be in their older years, what are they going to be prioritizing when they're looking to move to maybe a retirement home or their retirement house long period of time? One thing I'm going to look at is the crime. So if I do a crime map over here, hopefully I don't see a lot, and I don't. So what do I tell people? Hey guys, I'm selling my property, and I don't know what your address is, but I'm just gonna drop a sticky note. I'm gonna presume it's over here. I'm gonna say was it Glenn's property? Drop a little note. I'm gonna say, hey, did you know that in the last 6 months, there's only been there was one B&E back in October, and there's been no violent crime within a quarter-mile radius for this amount. I'm going to use this information to showcase, look how safe this area is relative to other markets inside of Chandler. We have no violent crime, no firearms, no motor vehicle thefts. We have, in this particular neighborhood, look at this. I don't know what this neighborhood's called, but looks like it would have a name. It looks pretty nice. I might say this neighborhood has had no crimes reported from the local police district in the last 6 months. Look how safe this area is. For someone else as well, for older demographics and be buying a property here, one of the questions is going to be, well, this is my retirement. I need to make sure I put my this property, if just in case I need to pull out a refinance to support a college education, or I need to support something like, a large expense. Will my property hold its value here over time? I'm going to look to see how the appreciation rate's been performing here, so I can go tell in the prospective buyer, hey, look at this. Yeah. Hey, buyer, properties in this zip code appreciated 67% in just 7 years. Imagine how much more valuable your property is going to be in a few years from now. And now your prospective buyer is saying, wow, low crime, property values are going up that high. Okay, I really like this. And then if this is someone who's going to be a snowbird, they're here for half the year and they're here for not half the year. Because remember, we looked at the age demographics. I might come in here and take a look at the rents and say, hey, this is a two-bedroom, single-family house. When you guys aren't here in the summertime, or when you guys aren't here in the wintertime, you can rent this thing out for $3,000 a month. Imagine that. Your mortgage already paid for.
Collapse, which
So,
can create a new security crisis in the West Bank on top.
So
I muted
that's
that for you. Sorry.
thank you. So really quick example of, I can get an idea of who is buying here What do they prioritize? What can I show them? Things like low crime, high appreciation, the ability to rent it out for snowbirding. And I can custom tailor my sales pitch with my agent or my broker to say, this is who we're targeting. This is how I want to be successful here. So I've gone through a lot of information, a lot of stuff coming together. I do want to let you ask, for those of you who live there and those who don't, based on everything we've gone through today, would you invest here? Would everything you've seen, share with me your thoughts. Now, this is a lot of high level data, but hopefully I've been able to boil it down to that point of you can see how all this information is coming together to create a narrative of what's going to work here.
Yeah, we'll just open it up to questions. Feel free to take yourself off mute.
Absolutely. Let me see here. Does it do Airbnb? We do have an integration with Airbnb, so you can see some Airbnb listings. Someday we will have AirDNA directly integrated, but for now we do not have a direct integration to AirDNA. And I think their product's $400 a month per zip code. They're very expensive. Head of marketing now. And all your neighbors are elderly snowbirds. See? Like I have to point that out. I have not been the Chandler. I hope that everyone here recognizes that we just got as specific as possible on where to buy, what to buy, and how, backed up by someone who lives there right now. You can invest in real estate nationwide with the confidence of someone who actually lives on the ground and move faster and find better deals and have better success by doing the market research. And we did it all in like 20 minutes. It was like 20 minutes per deal. Absolutely. Thank you so much. So you guys can see like the pain points with doing this the normal way, the old way, is you'd go to, if anyone that's on our website right now, you can see there's dozens of different websites you'd have to go to. There's all this time spent, and it's a lot of data. This is why I built Bright Investor, because investors like people like yourselves who are tech enabled, who are data centric, who are looking for information to not waste dollars you work so hard for, whether that's buying a long-term rental or investing in someone else's deal. This is why it matters. It's also why Brandon Turner from Bigger Pockets endorses us and works with us, because we're filling this need for people to go do this and actually not to pay thousands of dollars for access to data like this. You know, CoStar is an example of a commercial real estate product. You have to spend, I think, $1,500 to $2,500 per month to get access to one type of data. Daniel's nodding his head there. But there's all these different sites charging all this money, all this time, and they only do one piece of value. That's why we're trying to bring this all together into one place. And so for people who want to come try Bright Investor, I'd be happy to come check it out with you guys. What we do is we charge, it is a paid service. It's $9.90 for an entire year for access to Bright Investor. But we are launching our newest version next Thursday, actually. So we're giving 25% off an annual membership with Bright Investor, off that investment to an annual membership. So it becomes about $62 a month for nationwide access to all this data everywhere. And all that can be started at brightinvestor.com. And I'm also, Daniel, I want to say thank you so much for having me on today. I'm also throwing an extra thing on here. Anyone that invests in an annual membership for Bright Investor, I'm also doing one-on-one personal coaching and training session to boost your business. So whether that's help on picking a market, help on analyzing a deal in a market, or just education on how to analyze this more effectively, anyone that does an annual membership today, setting that to expire midnight tonight, will also get a one-on-one session with me to talk about your investing goals and what you want to do if you have any questions as well.
All right. And can everybody take themselves off mute and thank Donato for coming in and talking to us today?
Yeah.
Thank you.
Thanks a lot, Donato. Appreciate it.
Thank you.
Thank you.
Absolutely.
Thank you.
Absolutely.
Thank you.
Thank you.
Thank you.
Thank you. It's a really nice looking tool you have.
Thank you. Absolutely. Happy to help. And for those who want to get in touch with me, I have my contact information right here. It's donato@brightinvestor.com. That is our website, brightinvestor.com. And as a reminder, and anyone that does the annual, again, just use the code my first name, Donato, at checkout, give you 25% off your whole first year. So I hope you guys hope that helped answer a lot of questions on market research, how we put that together, how we answer those things to be successful, and really looking forward to hoping hearing from Daniel how you guys take this information and run with it.
I think you'll probably have more insight into that than I will.
Hopefully.
All right.
Thank you again.
Thank you to everybody. Next week, we will see you back here again. We have a speaker who's going to be, oh gosh, I should have looked this up ahead of time, but we have another great speaker coming up next week. Talk to you all then. Bye.
Thank you. Here we go.